Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by John Husselby, Head of Multi-Asset for Liontrust. Hi John.
Hello there.
There's a lot going on out there, isn't there? And as multi-asset, you have a global cross-asset view of it. I suppose we better start with the newest news, which is gold is on the up. What do you feel about it?
Well, the gold price up around about 20% in the bullion and 60% if you've been lucky enough to put into gold shares. Now, when the gold price goes up in that respect, typically it signals one of two things. There's inflation. Well, there's not much of that around if we look where the oil price has been going in the last couple of years, or there's fear in the market. It's probably more of the latter at the moment. Having said all that, whilst the gold price has gone up, it's nowhere near where it was this time last year or indeed 3 or 4 years ago.
There is, of course, fear in the market, and not that we're in the business of scaremongering, but there seems to be quite a few different things to be worried about. What are your biggest concerns as a multi-asset investor?
Yeah, don't try to be put off by the markets by the short-term sort of emotional behaviour, or as the Americans say, the emotional discomfort that's going on at the moment. And that discomfort is being caused by two things. The price war that's going on in the oil market. Clearly, there are low-cost producers, traditional low-cost producers, who are trying to get rid of, essentially, the high-cost producers. Where are they? They're in the US with fracking, in Canada with the oil sands, and also in some of the emerging markets, the offshore deep drilling that's going on. The other fear that's going on is obviously in China, the hard landing scenario. We know that China is moving from what is a manufacturing economy into a service-based economy, and perhaps they're not doing it in a smooth way. Indeed, I don't think anyone has in the past, but that's certainly causing some uncertainty in the market. But to us, we don't really think it's new news. We think it's a bit of noise.
And of course, just because there are uncertainties doesn't mean that you can't invest there. Indeed, sometimes when prices come down, there can actually be an opportunity for some investors. So presumably you're not avoiding emerging markets altogether just because there may be contagion risk from China.
No, I mean, I think, market timing, it's not something that we actually participate in, but valuation we do. We do think there's a lot of empirical evidence to say back valuation in the long term, that's the way to make money. So if you're looking for bargains at the moment, well, look at Asia, look at emerging markets, and look at commodities, not necessarily gold, but look at commodities, look where the oil price is, and other commodities as well. So we do think that there are bargains to be had there. And, the noise that we've seen in the market, that's given us opportunity to top up in Asia, top up in emerging markets. A little too early for us for commodities, but certainly we've got our eyes on that.
And where exactly will you be selling in order to free up that liquidity to put into those opportunities?
Well, you're selling the areas of the market that have done well. And that's the whole idea of investment management to us. Sell those areas, have less of those areas which are expensive, and look for the ones that are cheap. What's been expensive or what's expensive? Obviously the US and the UK in terms of equities. And what's cheaper? Well, emerging markets and Asia. But also we like Japan and Europe. And the reasons why we like them is because there is still monetary easing going on there. And they're the places to look.
John, thank you very much. This is Emma Wall from Morningstar. Thank you for watching.